the world runs on one piece of paper. For nearly 80 years, the United States dollar has been the center of global trade. Oil, tech, food, debt, priced, settled, and stored in a currency controlled by one country. It became so normal that nobody questioned it. The dollar wasn't just money, it was the system. But systems don't last forever. Quietly, without headlines, without drama, China has been making a different move. Not loud, not sudden, just consistent. Month after month, year after year, it has been stacking something that doesn't need Wi-Fi, permission, or a banking network. Gold. Not because gold is flashy, not because it's trendy, but because gold doesn't belong to anyone else. While the world debates interest rates and stock markets, central banks are playing a deeper game. One about trust, control, and what money really is. When politics enters the chat. So the real question isn't, is China replacing the dollar tomorrow? It's much more interesting than that. It is. What happens when the world is? Second largest economy decides it doesn't want to rely on the world as first anymore, and starts preparing for a financial system that looks very different from the one we grew up in. Tonight, we're breaking down the strategy, the signals, and what it could mean for the future of money calmly, clearly, and without the fear-driven noise. When people hear the phrase that China is trying to replace the United States dollar, it sounds dramatic, like a financial version of a regime change. In reality, what's happening is far less cinematic and much more strategic. This is not about tearing down the dollar's role overnight. It is about slowly making sure China is less vulnerable to a system it doesn't fully control. For decades, the US dollar has been the backbone of the global financial system. Countries use it to trade with each other, to price commodities like oil and wheat, and to store national savings in the form of foreign exchange reserves. If you zoom out, the dollar is not just America's currency. It's the world's default operating system for money. That system works smoothly most of the time, but it also gives the United States enormous influence over global finance, from interest rate spillovers to sanctions power. China, as the world's second largest economy and the largest exporter, operates heavily inside that dollar-based system. A significant portion of its foreign reserves has historically been held in dollar-denominated assets, especially US government bonds. That made sense for years because those assets were considered liquid, stable, and relatively safe. But from a strategic perspective, it also meant that a large chunk of China's national savings depended on the policies, politics, and financial infrastructure of another country. Diversification is the key word here. Just like an individual investor wouldn't put their entire life savings into one stock, a country doesn't want all of its reserves tied to one currency or one government debt. By steadily increasing its gold reserves, China is adjusting the mix of assets it holds. Gold doesn't replace the dollar in trade settlement, and it doesn't generate yield like bonds do, but it serves a different purpose. It is a neutral reserve asset that isn't someone else's liability. When China buys gold through its central bank, it is essentially converting part of its paper-based reserves into a physical store of value that sits outside traditional financial plumbing. Gold cannot be printed by another country. Its supply grows slowly, and it does not depend on the creditworthiness of a foreign government. In that sense, it functions more like financial insurance than an investment designed to maximize returns. This shift also reflects a broader desire for resilience. Global finance has shown that access to dollar systems can be influenced by geopolitics, payment networks, correspondent banking relationships, and reserve assets can become tools of pressure in times of conflict or political tension. From China's point of view, reducing reliance on dollar assets is not necessarily an act of aggression. It is a way to ensure that its economic stability is less exposed to decisions made in Washington. Importantly, this process is gradual. The dollar still dominates global trade invoicing, cross-border lending, and central bank reserves worldwide. China itself continues to hold large amounts of dollar assets because the system is deeply entrenched and highly efficient. What's changing is the direction at the margin. Instead of increasing dollar exposure as rapidly as before, China is channeling more of its reserve growth into gold and, to a lesser extent, other currencies and real assets. Seen through this lens, the narrative shifts from replacement to rebalancing. China is not trying to crash the dollar system. That would hurt its own economy. which is tightly linked to global trade and dollar liquidity. Instead, it is preparing for a world where financial power is more distributed and we're holding a mix of assets, including gold provides a buffer against uncertainty in a system that is no longer taken for granted as permanently stable.